Hey guys, welcome back to the Capital Mindset Show. Today we're going to be going over Voyager Digital's earnings report, and this is the time that it has been waiting for, the day under the sun. We are going to be discussing this company that has been asked about quite often, and we'll briefly kind of talk about Coinbase. So for you guys probably know a little bit of my opinions already regarding, for example, this brokerage and the other brokerage, Coinbase. So I'll share first my preliminary thoughts. I am coming into this not liking Voyager Digital too much. I've already expressed this opinion in other videos, live streams, etc. And so I don't hold any crypto assets in any of my wealth in crypto assets. I only have a single speculative investment, I guess you could say, in Overstock. And that's as far as the extent to my exposure to blockchain really goes. I don't hold any shares of Coinbase or Voyager Digital, so just to understand that before we begin this video. Okay, so we're also going to be, I guess, talking about what are YouTubers really saying about this stock? Because this stock, for some strange reason, has a ton of popularity on, I guess, the YouTube space. Why? I don't know, but again, I actually ask you guys, if you guys are really popular on this stock or really bullish on this stock, please comment down below and give me a quick rationale as to why it is that you are. And please don't be shy. You know, I'm not going to attack you or anything. I don't bite or anything like that. But, you know, that laugh wasn't because I'm lying about that. I swear I don't bite. And so, yeah, we'll begin with that. I'll leave you guys with that, and we shall go and talk about it.
A question or make a comment, please press the star key followed by the 1 on your touch-tone phone at any time. Questions will be taken in the order they are received. At this time, I'd like to turn the call over to Kevin Rodriguez, Investor Relations at Voyager. Please go ahead, sir.
Thank you, operator. I'd like to welcome everyone to the Voyager Digital Limited earnings call. Today, we will be discussing our fiscal year 2022 third quarter results, which we announced prior to the market open this morning. On the call today are Steve Ehrlich, our Chief Executive Officer, and Evan Tseropoulos, Chief Financial Officer. I would like to take a moment to direct investors to the Investor Relations section of our website at investvoyager.com, where we have posted our investor presentation and upcoming event schedule. Before we get started, I want to remind everyone that certain statements discussed on this call are based on information as of today, May 16th. It may contain forward-looking statements which are subject to risk and uncertainty. And given our limited operating history, market volatility, and unprecedented industry growth, trends could materially deviate from today's levels. Actual results could differ materially from our forward-looking statements if any of our key assumptions discussed in today's earnings press release and the comments made during this conference call or in our latest reports and SEDAR filings, each of which can be found on our website, www.investvoyager.com, or under our profile at www.sedar.com, are incorrect. The company has made assumptions that no significant events occur outside of the company's normal course of business, and that current trends and adoption of crypto assets continue. Listeners are cautioned that assets on platforms, revenues, and trading volumes fluctuate and may increase and decrease from time to time, and that such fluctuations are beyond the company's control. We do not undertake any duty to update any forward-looking statements, except where required by law. Today's release also includes references to non-IFRS financial measures. You should refer to the information contained in the disclosures found in today's release, including definitional information and reconciliation of historical non-IFRS measures to the comparable IFRS financial measures. This call will touch on some guidance provided in our earnings press release issued today. I would encourage each of you to review the forward-looking statement, risk factor disclosure, and similar disclosures in today's press release. Please note the dollar amounts referenced are in U.S. dollars, unless otherwise noted. With that, let me turn over the call over to Steve Ehrlich, Voyager's co-founder and CEO.
Thanks, Kevin, and thanks to everyone for joining this morning. This morning, we announced that Voyager has obtained subscription agreements for a private placement with gross proceeds of approximately $60 million led by Alameda Research, which was a follow-on investment from their strategic investment in October. We are excited to have them lead this round with additional investment from strategic investors and partners, including Galaxy Digital, Block Damon, and Digital Currency Group. These participants are deep industry players who partner with Voyager as we pursue our goal to deliver quality execution, custody, staking, lending and borrowing, and will assist in our expansion into NFTs and Web3. This investment shows the dedication to and power in the Voyager model and how much these partners value the Voyager relationship. These funds raised through a PIPE offering add to our existing net liquidity position to give Voyager a position of over $225 million of available capital. Closing of this fundraise remains subject to customary closing conditions, including approval of the Toronto Stock Exchange.
I'm going to have to repeat that. Hold on.
In our expansion into NFTs and Web3. This investment shows the dedication to and power in the Voyager model and how much these partners value the Voyager relationship. These funds raised through a PIPE offering add to our existing net liquidity position to give Voyager a position of over $225 million of available capital. Closing of this fundraise remains subject to customary closing conditions, including approval of the Toronto Stock Exchange.
Okay.
Voyager's strengthened liquidity position allows us to continue to grow our business, and together with the changes we continue to make in our cost structure, puts the company in a strong industry position to weather any protracted market slowdowns going forward. On our last call, I noted that we were aggressively working to turn our rewards program from a marketing cost to a profit center. I am happy to report that changes underway as we adjusted the program on May 1st to significantly improve profitability for the June quarter and moving forward. As the marketing landscape continues to change, we are using our collective years of experience to continue to develop cost-effective programs and intend to make additional changes to maximize capital efficiency and continually optimize our cost.
So do you guys see this? So looking at this company, you have, okay, transaction revenues, 33 million. And this is for the quarter. Fees from crypto assets loaned. This is, oh my gosh. Okay, so this is already concern one. Merchant services, all right, fine. Staking revenue. You see, told you they stake. I mean, it should be obvious that that's what they do. But a lot of people invest in these companies not even knowing what proof of stake is or proof of work is. Well, this company, a lot of the crypto assets that they do have, they kind of engage in a proof of stake, which basically, to summarize something so simple or complicated and put it simply, the more of that currency you have in that ecosystem, the more likely it is for you to mine or mint a new one. So, you know, let's say, think of it like in terms of dollars. Let's say you have $10,000 or $1 million. If you have $10,000, you're less likely to get a new dollar than if you are to get $1 million. $1 million is more likely to get a new dollar. So they will take the assets, the crypto assets, and they will actually stake it into the respective ecosystems, and then they will get more of that crypto coin or whatever that into their pocket, and then that's considered a revenue, so staking revenue on that front. Then you have other revenues, don't know what that is, but total revenues is this is so interesting. Check this out. So rewards paid to customers, that's wow. Yeah. That's a lot. Marketing and sales, whatever. And they're saying that they're going to probably improve this. That's what they're claiming to do. Then stock-based or compensation employee benefits is there. Share-based payments is there. That's a real cost, by the way. Okay. If anyone was wondering. But yeah, and all this stuff is fine. That's a change in fair value. That's not a realized loss. That's fine. That's fine. So I have other concerns that we'll kind of discuss later in the video, but net loss is they're still at a net loss. The net loss is accelerating, it appears, because that's the 9 months, and most of it was in these 3 months. So again, that's probably mostly due to, well, actually, no, it's probably mostly due to this over here, because they had a gain here in the last year's months. Now they're reporting a loss there, so that's contributing to that drastically. Because they reported a negative loss, where previously they reported a gain. Now it's at a loss. So, but this is from the before other losses. IFRS makes things a lot simpler in some cases and more complicated in others. But Yep. So, yeah, we'll continue.
Account acquisition. The company has also begun a strategic review of all expenses and is committed to reducing expenses to keep the business streamlined and efficient in both expanding and contracting crypto markets. We think these changes will deliver profitable quarters even as we face market headwinds. The past week has been one of extreme volatility. Before I discuss our metrics and give an update on the business, I want to address a few specific related to recent events in the crypto market. First, we never listed the UST coin as we were never comfortable with the algorithmic stablecoin. For a coin to be listed on our platform, it goes through an intensive legal, business, and operational review process. In not listing UST, we protected many customers. Not all stablecoins are created equal. We operate using the USDC for customers, which in my view is the only true stablecoin as it is backed by a full reserve of US dollars and short-term US treasuries with a monthly attestation performed by Grant Thornton, one of the leading public accounting firms. We also spoke to all of our counterparties on lending and verified that there were no issues. In the past, we've had questions from investors about one counterparty, and as of today, we have no exposure to that counterparty. All Voyager customer U.S. dollar balances are held by our banking partner, Metropolitan Commercial Bank, and are FDI insured up to $250,000. We are a customer-focused business and therefore concentrate on the safety and security of customer assets. And lastly, over the past week, we have seen a significant increase in trading volume and account growth. Now, for our industry as a whole, the March quarter kicked off a challenging macroeconomic environment and lower trading volumes. But Voyager continued to deliver customer account and net deposit growth, build on our revenue diversification strategy, and expand our coin and product offering. Despite the challenging operating conditions in the quarter, customer engagement on the Voyager platform remained healthy. We had over 1 million unique users engaged with the Voyager app during the quarter, representing almost 30% of our 3.5 million registered users.
Oh, my God.
And while we saw an overall decrease in trading volumes, 25% of our nearly 1.2 million funded accounts executed a trade in the quarter, all through our award-winning mobile app as we added another 28 coins, reaching over 100 coins available for trading. These key metrics are something I get very excited about, as they are strong indicators of the level of engagement that Voyager customers have with our platform. We also saw a significant growth in our USDC balances, and we believe many of these customers hold USDC while they wait for trading opportunities. There was a similar pattern in 2001 in the online brokerage industry, as consumers sold their equity positions, held the balances in dollars. They then redeployed those dollars later to re-engage in the next bull market run. Same pattern you see right now with the significant expansion of USDC being held by customers. I saw this in the internet bubble burst in 2001, and I saw it start again this past week. Back in the September quarter, I discussed Voyager's commitment to staking, which is at the forefront of our diversification model. We are now staking 12 coins through our partners with plans to add more this quarter. As we continue to grow the staking program, our average revenue per account, our ARPU, will continue to grow. The monthly ARPU for the quarter was approximately $24 per account in a lower transactional volume market, which annualizes to $288, delivering a return on our marketing dollars of approximately 10 months, demonstrating the effectiveness of our marketing program. Our app consistently ranks high among crypto-first apps in what we believe is the most competitive category in the App Store. And we recently won some significant awards, including Top 10 Most Innovative Personal Finance Company for 2022 from Fast Company and Top 100 Fastest Growing Online Brands in the U.S. from SimilarWeb. We believe our success in growth and engagement stems from our commitment to disciplined and data-driven marketing spend. We think the best way to engage new users and to grow the crypto ecosystem is thoughtful marketing that engages and educates new customers. With that in mind, we recently launched our Crypto for All campaign that brings more humanity and accessibility to the world of crypto as it appeals to a mass audience. The campaign features Voyager customers from a variety of backgrounds sharing their thoughts and experiences with crypto and Voyager, highlighting transparency, inclusivity, freedom, and opportunity. We've seen great results so far and are very pleased with the level of engagement. Calendar year 2022 is all about product delivery. Already this year, we have launched our popular Moon Mode and have onboarded customers to the beta programs for both our debit card and our desktop app. The debit card beta program is going well. We are seeing high engagement and learning more about user behavior. Based on the success of this beta program, we are pleased to announce that our issuing bank partner, Metropolitan Commercial Bank, and our program manager, UCO, have agreed to move to full widespread launch. As we onboard the wait list of approximately 200,000 users through the remainder of this quarter, we will obtain significant data that we can then utilize to deliver an even deeper and more robust Voyager loyalty program based on the very popular VGX token. The next upgrade to the Voyager loyalty program is in development, and we have pre-announced that the base participation level will begin with only 50 VGX tokens held and will allow customers to advance to new levels by using the app and Voyager ecosystem. In addition to the delivery of debit cards, we anticipate a widely expanded deployment of the desktop app as well in the current quarter. The addition of the desktop, combined with more coins added to the platform, underscores our commitment to delivering more value to our customers. We were recently the first platform to launch ApeCoin, which helped drive both trading and customer acquisition.
Did you say ape coin? Is that what he said? Was that ape coin?
Voyager ecosystem. In addition to the delivery of debit cards, we anticipate a widely expanded deployment of the desktop app as well in the current quarter. The addition of the desktop, combined with more coins added to the platform, underscores our commitment to delivering more value to our customers. We were recently the first platform to launch ApeCoin, which helped drive both trading and customer acquisition.
What is wrong with
Our
people?
payments business has started to get some significant traction as we have added 3 payment service systems in the quarter, and we have added some major merchants to the system, as well as launching our business platform, which has added a significant number of accounts in the quarter, growing 28% over the December quarter. This is all on top of the Coinify system being core to international expansion coming over the summer. Another area of activity I want to provide an update on is Voyager's venture investments. We strongly believe investing in the digital asset ecosystem. Over the last 12 months, we have made a number of equity investments in private companies. Previously disclosed investments include Fundstrat, who Voyager partners with on digital asset research, led by Tom Lee, CoinLedger, who Voyager partners with on tax preparation, and Talos, a cutting-edge trading platform we use. We have also made some investments in companies that supply some of the infrastructure needed to support the business, such as Socure, our KYC, Know Your Customer provider, UCO, our ACH provider and debit card program manager, and Blockdaemon, our node provider. The investments have grown in value since all initial investments. We're excited about the future. We believe participating in the financing rounds of select blockchain-associated companies and infrastructure providers is not only a potentially lucrative investment activity, but also an effective way to stay fully current in a rapidly evolving crypto environment. Focus on venture investment activities, I'm happy to announce we recently formed a new subsidiary called Voyager Digital Ventures, LLC. The subsidiary formation is only part of our ongoing efforts to further centralize and hone our investment activities. As you know, we spent calendar 2021 investing to create a truly scalable and more mature platform. The investments we've made and continue to make allow us to successfully build out our operations and strengthen our foundational core through automation, tooling and scalability, improvements, and continually improve our customer service. I truly am extremely grateful to be surrounded by such an amazing team, and it's extremely gratifying to see the progress we've made. I'd like to provide an update on the regulatory front. As we have shared in press releases, we have been in ongoing dialogue with regulators. Our businesses remain largely unaffected to date. Voyager's ongoing communications with these state regulators is geared to better understand the terms of their respective orders and clarify certain statements in the orders that Voyager believes are inaccurate. It is Voyager's goal that these communications will result in a collaborative and constructive dialogue on an acceptable path forward. Voyager's discussions to date with the regulators demonstrate a willingness to work with Voyager to pursue a mutually acceptable regulatory framework. The company believes this provides an opportunity to contribute to the evolution of the regulatory framework for crypto, which is needed more than ever due to the unprecedented growth in the adoption of American consumers. Before we close, I would like to take this time to thank Mike Legg for all the work he has done in our investor relations role.
I was only laughing because I know that some of the bullish theses I took a look at before was like, this guy's from E-Trade, this guy's from E-Trade, and she's from E-Trade. And oh yeah, look, PwC over here, so Big Four. I would hope that your management team has experience, but that's not a reason to be bullish. But yeah.
Mike is moving on to pursue other endeavors, and Kevin Rodriguez will fill his role on an interim basis. Also, I am pleased to announce that Evan Seropoulos will be moving into a Chief Commercial Officer role to help us build out our revenue diversification, as well as partner with our new CFO in creating cost efficiencies. And I am pleased to announce that Ashwin Prithapal is our new Chief Financial Officer. Ash comes with years of experience, including being the former CFO of Galaxy Digital, and we are excited to have him on board. Ash's first day is today. In closing, we strongly believe that we are in the early stages of global crypto adoption, and there is an outstanding opportunity for Voyager to grow users and revenue as we execute our game plan. As part of this growth, we have a goal of returning to positive operating income after adding back stock-based compensation in early calendar 2023.
After adding stock-based.
Voyager is at the forefront of displacing traditional banks and brokerages through the use of digital assets, and I couldn't be more excited about our future. With that, I'll turn the call over to Evan to review the quarterly financial results in more detail.
Thank you, Steve, and thank you all for joining us today. As a reminder, all figures discussed on today's call are in U.S. dollars under IFRS. I will speak to our fiscal 2022 third quarter ended March.
I'm looking through this and I'm noticing that a particular creator just probably only read the slide deck from previous quarters ago, and just used that only as the reasons to be bullish, which is interesting. But
31, 2022. As Steve highlighted, our third quarter transaction revenue was impacted by significantly lower trading volumes, consistent with the rest of the industry. Our total revenue of $103 million is in line with our previously announced guidance of $100 to $105 million. Despite overall lower trading volumes, we continued to add new accounts to the platform, with an increase of nearly 115,000 funded accounts in the quarter, for a total of 1.2 million funded accounts. Overall assets on platform decreased slightly from $6 billion to $5.8 billion in the quarter due to overall lower crypto prices and offset by net new deposits of $574 million for the quarter. With respect to transaction revenue, in addition to overall lower volumes declining, our overall average spread, excluding stablecoins, decreased from 110 basis points in the December quarter to 92 basis points for the March quarter. In periods of lower volume and lower volatility, we see a heavier concentration of our transactions in Bitcoin and Ethereum. These major coins accounted for 37% of our non-stablecoin volume, compared to just 25% in the prior quarter. Overall, USDC customer balances grew $260 million, or 45% in the quarter. In periods of lower volatility, we see our customers moving more into USDC to earn yields in place of trading, which is a testament to the stickiness of our platform in retaining customer assets despite lower trading levels. Our combined lending and staking revenue totaled $45 million as we continue to make progress in maximizing yields with staking protocols. We continue to expect the staking business to outpace the lending portion of the revenue line item and expect to increase staking utilization of ETH going forward. It is important to note, with recent news related to UST and Luna, that Voyager does not have UST listed on the platform and has not placed any assets in any DeFi lending protocols such as the Anchor platform. With lower trading volumes and a loss on a rewards program, we had an operating loss of $43 million, or $37 million before stock-based compensation. As we move into the fourth quarter, we are making a concerted effort to tighten our spend across the board and have already made progress in narrowing this with the adjustment of our tiered rewards program to drive at least a break-even program. On overall liquidity, we finished the quarter with nearly $100 million in cash and adjusted working capital of $185 million. This concludes our prepared remarks. With that, I'll now turn it over to our operator who will open the line for questions.
At this time, if you'd like to ask a question, please press the star and 1 on your touchtone phone. You may remove yourself from the queue at any time by pressing the pound key. Once again, that is star and 1 to ask a question. We'll take our first question from George Sutton from Craig-Hallum.
Thank you. It would seem, Steve, based on a couple things you said, that things could be challenging for the following reason. You mentioned you're maintaining very high ratings in downloads, but you are also in the most competitive category in the App Store. So can you help us with that versus now looking to pull back on expenses? What sort of things are you looking to try to accomplish in terms of key metrics?
Thanks, George, and thanks for being with us this morning. It is challenging. There is competition, but where we do set ourselves apart, and we always have, is a few places. One is the number of coins we have on our platform, and we've always said that the ability for consumers to have an easy-to-use platform, probably the best platform with all the coins, and participating in the altcoin space with our platform is one of our big differentiators. That's one. Two is the debit card that's begun to roll out is another big differentiator, as people can earn rewards on not just holding the USDC with us, but they earn rewards for the use of the platform. So we still think that the platform we have, even though it's more competitive, by being product differentiated with those two things, our expansion in international will all make our metrics, which we still look at as that's an important metric, is new accounts is our key metric, but we don't do it at all costs. And I think Pam and the team has done a great job to maximize the efficiency of our marketing program, which again sets us apart. So KPI for us still number of new accounts, the differentiated platform is how we really will set ourselves apart and drive cost efficiency. And our marketing dollars, we, as everybody else does coming in, we seem to be very, very good at finding areas that others are not participating as well. And we find those places and become very cost effective as well. And then on the rest of our cost infrastructure, finding areas that, I think it's imperative that as a company, whether it's us or anybody else, you're always looking at your cost structure to find out how you can be more cost efficient. And we've made a concerted effort now to begin that as well.
One other question, if I could. Given that the cease and desist came at the end of the quarter, can you give us any perspective on how much impact the business might see from the cease and desist?
We've seen zero impact from the cease and desist. Business is as usual. We have
A lot of ums.
continue to operate, as I said in the statements, is that we're working with each of the states, and they seem to be very open to working through all those orders.
Classic.
Thanks, George.
Classic.
Our next question comes from Kyle Vogt from KBW.
On the regulation. You know, it sounds as though you're speaking to those individual states to create an acceptable path forward. However, can you confirm whether you're also speaking with the SEC about a path forward? And I guess given what we saw with BlockFi and their path forward that the SEC laid out with them in terms of the filing and registration statement, is that what investors should also be thinking about as a base case for how you could continue to offer the EARN program, or is that not going to be necessary, do you think, given your conversation so far with the states and possibly with the SEC?
Well, Kyle, thanks for taking time this morning. Appreciate it. Look, as we've been saying for a long period of time, we've had ongoing conversations with all regulators. It's part of being in a regulated, or in this case, an unregulated business, but being part of in a regulated business for 20-something years. The conversations with regulators are always ongoing. We don't believe, we've said that in the statements too, we don't believe that these are securities, what we offer. There are multiple paths. If the path that's determined is to register, then we have multiple ways to do that as well. So we're just going to keep having the conversations, but I don't think there's, in my mind, and there's a lot of paths forward here, and it not necessarily has to be registration.
Got it. Understood. Thank you very much. And then another follow-up would just be, and sorry if I missed this in the prepared remarks, but just how quickly do you expect to see those rewards paid to customers move below the aggregate level of the staking and lending revenues? Seems like we're still firmly kind of in negative territory for fiscal third quarter, but can we expect it to be kind of break even, if not maybe profitable on that as we head towards kind of year end?
Yeah, so we made adjustments in the program as of May 1st. We put a tiered rate structure in place. And so, starting in May, we expect to be break even to profitable in May and June. So a lot also from how profitable or break even it is based upon the borrow market as well. But those inputs and those changes were made as of May 1st.
Understood. And if I could just squeeze one more in, just over the past week, we think investors have become increasingly concerned about contagion risks stemming from Terra and stablecoins more broadly. So I appreciate the prepared remarks around Tether. Can you also remind us how much of your lending activity is collateralized, and if you expect that to change, or if you expect the trajectory of those lending balances to change as well?
Very good question.
I guess, given the uncertainty over the past week or two, did you call in any of those loan balances? Thank you.
Yeah, so it's disclosed in our financials, the number that's collateralized of the loans. There's collateral there. It's still a very small portion, as we've been saying for the longest period of time, but the people we lend to are some of the biggest names in the industry. As we stated too, we had conversations and verified there was no contagion with them. Had conversations with every single one of them. And since we limit who we lend to these parties, we're really comfortable. We did not have to call anything in, and we had zero issues with any of our borrowers.
Great. Thanks, Steve.
Thanks, Tom.
Our next question comes from Joe Gomes from Noble Capital.
Good morning.
Hey, Joe.
So outside of the rewards program, what else are you looking at in order to try and cut on the expense side, as you said, to bring it more in line to where today's environment is?
Yeah, well, the rewards program itself will be savings of upwards of $15 million a quarter as well. And then in addition to that, it's just an overall review of all our expenses and, where we can tighten our belt on that front. So it's an ongoing thing.
Yeah, just to add to a few areas, we've grown so much in the past 18 months, as you know, and we were tied up with some contracts earlier on. So now we've achieved economies of scale, and a lot of our contracts are coming up for renewal. So we'll be using that leverage that we have to apply that and renegotiate some of our key contracts.
Okay, great for that insight. I appreciate it. And one more, Steve. Maybe if you could just kind of give us obviously what's happened here in the past 10 days or so. I mean, what have you guys been seeing in terms of attracting new people to the platform over these interesting times, let's call it? I mean, is it just kind of come to a stop, just business as usual? Just any insight that you can kind of give us of what's been happening here, kind of since the beginning of May would be appreciated. Thank you.
Yeah, May has started off to be a really good month for us here. We've seen in the last week tremendous activity on the platform. We've seen levels of account growth that were equal to some of the highest points of 2021. So we've seen some times here that we are a place where people go when they want to trade, and we've seen that customer acquisition pick up quite a bit, not go the other way in the last week. Now, we also have seen customers, you have different sets of customers, right, subsets of customers, and there are a subset, as we mentioned, too, that in this volatility phase, they put their money into USDC. So we've seen USDC balances grow, but we've also seen a bunch of new accounts come on the platform and trade some of these coins that are pretty volatile.
Great. Thanks for that. I appreciate it. I'll get back in queue.
Thanks, Joe.
Our next question comes from Adhir Kadhi from Eight Capital.
Good morning, guys. Thanks for taking my questions here. And my apologies if I may have missed this in your prepared remarks, but what I wanted to get into is just maybe in this more volatile market. I know you said you're going to cut a little bit of the spending, but I just wanted to think, how does that change your overall investment priorities?
Thanks, Adhir. I appreciate the question. I'm not sure the investment, we're going to continue to invest in the business, but I think as Evan pointed out here too, we do have a bunch of contracts that have come up that we're renegotiating, getting more cost efficiencies out of that. As we've grown in scale, some of the infrastructure we have allows us to take advantage of scale of higher volume discounts. And then, on top of it is the rewards program that we've now changed and turned from being a cost center to a profit center. Those are three main ways that we're not going to stop investing in the business. We feel that the way we can spend marketing dollars, we're going to be more efficient than the competition, and we have been for the longest period of time. And we have found other ways to market that others haven't yet, and we're going to continue to be most efficient as we can with the capital.
Okay, great. And then are you finding that user acquisition is slightly different in this environment as well, or is that kind of just steady path that you guys are really leveraging your brand to kind of get out to the word to users?
Yeah, the cost, as we said in the statement as well, is that, our ARPU is about $288 on an annual basis, and we're getting that paid back in 10 months or less. And that was through the March quarter, which wasn't didn't have a lot of volume and wasn't all that volatile. we've seen a pickup in volume and a pickup of our effectiveness of our marketing again in May. And again, volume and volatility drive a lot and help us drive the cost down. But the other thing that we've started to do is we probably have the strongest crypto community in the industry. And we're leveraging that community to help drive the cost down. And with our new Voyager Loyalty Program 2.0 coming out with some of the benefits that consumers get for referrals and using the platform and then throwing the debit card on that as well, we have so many effective ways to drive the marketing cost and the CPA down that gets me so excited about this business because we're starting to see it. I mean, you can go onto social media and Twitter and see everybody posting the use of the debit card. What better way to use marketing than to have customers, help you out and support you and bring that. I mean, it's all over Twitter these days with people using their debit card. And we've got just a small fraction of the 200,000 people using that debit card. Just imagine what's going to happen when this debit card gets in 200,000 people's hands over the rest of the quarter.
No, that's definitely true. Something to look forward to. Thanks a lot, guys. I'll pass the line.
Thanks, Video.
And once again, that is star and 1 to ask a question. We'll take our next question from Chris Allen from Compass Point.
Morning, guys. Thanks for taking my question. I just want to follow up. You are stating that you're seeing account growth in May, which to me is kind of shocking in the current environment. And anecdotally, I've been talking to people who have trouble. They're having trouble liquidating assets on your platform and actually taking them out of your platform. So I just want to confirm that. And the activity that you're seeing from a trading perspective, are you seeing people actually putting money to work in crypto, or are they liquidating positions and moving to cash or to stablecoins?
Yeah, we're seeing a whole bunch of things, and I don't think anyone has had any issues with taking money and or moving coins off the platform at all on our platform. Customers are really active on our platform. The platform, knock on wood here, when every other platform went down in the last week, we didn't go down. It's a testament to Rakesh and the team and the work that we put into scaling the business over 2021. It slowed down a little bit of the product development because we had to scale this business, and it's proven to fruition right now. We've picked up accounts. We've said this all along, that our business is bigger and deeper than just Bitcoin and Ethereum. And by having coins that are active in the marketplace, that are volatile, that we're seeing people trade on our platform these coins. And we've seen a lot of active trading in the last week. So we've always been on this mission to bring the accessibility of more than 2 coins and more than 5 coins or 6 coins to the retail consumer. We've done that. We're seeing people trade a lot. We are seeing a group of customers that are retreating but leaving their money in USD, which is FDIC insured up to $250,000 on our platform, just like any other bank. Any cash you hold with us has that FDIC insurance. Plus, then we have USDC that people are getting the rewards on that, on the USDC as well. So we're seeing multiple touch points and multiple activities from various groups of customers. And again, I think the last piece is and this is all being done, and we've never listed UST. So we have all the other coins we have on the platform that are active again. There's an activity spike, happening in May, and we're taking advantage of it. And our customers are taking advantage of the ease of use of our platform to trade on our platform.
But then why are you cutting costs and raising capital?
Oh my God.
Look, we want to, from a raising capital perspective, these are some of the best names in the industry that wanted to be part of Voyager and expand their relationship with Voyager. And they're going to help us grow. We're adding, more extensions on staking, more extensions on execution, the assistance in getting us into NFTs and Web3. All these are some of the best names that wanted to be part of Voyager and help us grow the business. So, we felt it was a really opportune time for us to do that, show the market how important and how we're growing and how Voyager is one of the top crypto companies in the U.S., and that's before we even get into our international expansion. And cutting costs is always something every good, smart company should do. And we're just to do that, we're going to make sure with a drive to profitability. You know, we want to get to break even, so we're looking at every single cost. We've gone through all our contracts, as Evan mentioned. The ability for us to renegotiate because of our scale is all at the top of mind.
And the last one for me, you're changing your rewards program to bring it to break even. Historically, one of your arguments for why you would avoid being classified as securities there is because you lost money on it. So when you bring it to break even, does that entail a risk now with the SEC to be classified more as a security?
We don't think that has much of a bearing in this point in time. We've also looked at the rates across industry and where we can, and we're comfortable with our analysis on the program and where it is, and that it's not a security, and we'll continue to move forward that way. I want to also add one other thing on the capital too, and the capital raise is, we're having a good May, but there is uncertain times, and to have even more capital on our balance sheet, from strategic investors puts us in a really good spot.
Thanks, guys.
Thanks, Chris.
And we do have a follow-up question from Kyle Voigt from KBW.
Hey, thank you. I just wanted to follow up on the cost discussion and really around the operating environment. If this remains challenging for a prolonged period, or we're kind of really entering this kind of next crypto winter, is there a specific number for kind of the maximum cash burn that we should really be thinking about per quarter? And I know it doesn't sound like this quarter there's as much concern because you've already right-sized the rewards program. It sounds like the activity's been generally fairly good, but again, if we're kind of in a prolonged, more challenging operating environment.
Yeah, we with $225 million of capital in a challenging environment, if there was a March type quarter of lack of volume and volatility, we still, with $225 million of capital, we're extremely comfortable that we can operate our business and grow our business for well into 2023 and 2024. We have lots of capital now to continue to grow and be able to execute our game plan. We've seen it. One thing I want to say is we've seen this before. This team has seen it before. I've been through this at E-Trade in 2001, in my own business at Lightspeed in 2008. When market environments get challenging, you buckle down, you prepare for the worst, and you just figure out how you're going to grow and continue to grow the business. And then even in 2020, when we had a little crypto, you buckle down, we figure it out, and we feel like where we are today, we're good for the next couple of years with the capital we have. So I'm really excited about getting this raise done and having these great partners with us and where this business is going to go.
Cool. All right, we're going to cut it off there because it was like just a couple minutes left. And all right, so one thing I'll also want to highlight before we continue on to my opinions, if you're at this point in the video, I'll just state the following. If you guys aren't following me on Instagram and you want to see kind of like some morning updates, well, you can see them on YouTube Shorts, wherever you guys want to see them. I don't really care. But if you guys want to follow me on Instagram, cool beans. We're approaching 100, so 100 followers for Capital Mindset on Instagram. So popular. I'm going to get blue check marked on Instagram. All right, so there's a lot to discuss here, I guess. I loved the questions from Chris. Oh my gosh, Chris, if you ever somehow come across this video, you, my friend, are a great analyst. A lot of hard-hitting questions, not like the easier questions. So just a lot of hard-hitting questions that as a potential investor, which is how I take each time I do a video, I take it seriously, except for one stock, but we won't talk about that one stock. I will say that this is a company with a lot of uncertainty. I'll start off the bat, right? Because you probably saw while I was going through this, you might have seen some peculiar statements within this Canadian filing, by the way. So it's on cedar.com. So that's where you actually have to get all their financial statements from there. And so I've seen, again, let's actually just glance through it because I think it's funny at the very least. So I'm just going to go on YouTube, and I'll share this with you in a second. We look Voyager digital stock. Okay, so let us minimize this. And I was actually looking up the legal definition of security. It does seem like you're going to have a hard case. So let's just scroll through this. Okay, so a lot of actually varying opinions that are being recommended to me. So, yeah, because I know, okay, investors beware. Oh, 24 minutes ago. Okay. There we go. So 24 minutes ago there. Somewhere fishy is going on Voyager. Okay, so some mixed opinions. And this creator right here, he's quite interesting. The $5 just crashed buy. Very clever titling there. But, just the other 6 months ago, Voyager stock, oh my God, get ready, all in. Very interesting thumbnail there. And actually, I took a quick glance at it. If you guys wanted to see that, go check that out. It's pretty funny how that aged like fine milk, So I don't know what this guy's really talking about. It's not really down due to dilution. I mean, I wouldn't consider it. But so, for example, at this channel, we've been talking a lot about the liquidity crunch. And that's a unique way of saying it because now a lot of YouTubers have discovered that we're in the liquidity crunch. They're calling it liquidity crisis. So varying levels of, I guess, the YouTube-dom. And so I don't know where they really heard it from. Maybe they heard it from the TV. But I don't really watch the news at all. So I just do my own research. And we have discussions at my workplace about all this kinds of stuff. So yeah, just varying videos here. I took a quick glance at some of them. And yeah, so I will just state that the prevailing opinion by, I guess, the larger YouTube audience is that this is a fantastic company. And I've hinted at some of the bull case, for example. It's in their, where is it? Here it is. So let's look at the management team. E-Trade, CoinSquare, E-Trade, PwC, experienced management, buy the stock. Okay, well, that's not so fast. Let's just start with that, not so fast. So let's begin, and this is gonna be kind of technical, so to speak. But let's begin with the. We'll start with that later. Let's start with the top. Let's start with the top and we'll go down. So taking a look at the balance sheet here. This is IFRS, by the way, accounting. So international standards, not GAAP standards. So it's in some instances it's going to look a little bit different. In some instances it's going to be very different. Okay. So with them, cash and cash equivalents, we see it at the top here. So that's actually the same. In some instances, you might not even see it at the top, but they have current assets and then long-term assets should be, towards the bottom right there. So actually similar in this instance. But current assets, we have cash and cash equivalents of 99 million, down from 193 million. Okay, they IPO, they had a bunch of cash, now they have less cash, they expense that cash. Cash held for customers, that will come back later. That's the amount that is FDIC insured. We've talked about that with other banks. This is a liability to them in some degree. However, it's they're not actually recording because they're technically a brokerage. They're not like a bank. Okay, so they want you to grab that money and actually invest it into other things, right? This an example is like just held for investment by you, but let's continue on. Crypto assets held. So this is the amount that they hold respectively. So what's actually interesting is it should match out to the crypto assets payable to customers. So crypto assets held, not matchable. We'll see where it's matched. My apologies for that. Held for customers is the one that other people own. That the crypto assets held is what they have with actually, where do they say? Restricted respectively. Okay, what is the 895 million? Whatever. I don't think that's the point. Crypto assets loaned, we'll get back to that, but that's where a lot of interesting tidbits are. We'll get down to the bottom of this document. And crypto assets held collateral received. Okay, so those stuff I'm trying to figure out or pencil out in my brain which ones I'm going to talk about later. So I'm kind of all over the place. All right, so liabilities. We have crypto assets and fiat payable to customers. Okay, so that one's there. That should more or less match out with the amount. Oh, and that's why. So these should match out in some extent. So this plus this plus this should match out to somewhere around these two. Around there, give or take a little bit, because they're basically taking your crypto assets, then they loan out these crypto assets. They either stake them, which they were talking about. They actually talked about it in this conversation that they were growing that business. All right, so they're going to generate some income, and they'll probably show that in the P&L here. But crypto assets, collateral payable, that's fine. Warranty liability, all right, that's fine, that's fine. All right, all that's fine. Let's go over to the income statement. And so right here we see transaction revenue. That's the amount they're making buying and selling. So they take the delta between what they can buy and sell to you, and they act as a broker, so that's fine. Now, fees and crypto assets loaned, it's interesting to know that's about half. That's about half between the two, broken up between the two. Then they have merchant services, staking revenue, that is a growing business, and other revenue. So a total revenue of $102 million, right? And that's in thousands, so it's $1 million. And then over the 9 months, it's $349 million. So they made a lot of revenue growth. Look at that massive revenue growth. Remember from the live stream when we looked at Square or Block, that the crypto exchange portion of Block made them look a lot growthier in terms of sales than they otherwise would be, and the actual margin in that business line is very slim because you're basically buying and selling in that little quick margin. So yeah, a lot of sales, but not probably going to be very profitable in that line, okay? And the fees and crypto assets loans, there's probably going to be more profit there than in the transaction revenue. But we'll get to that because there's a lot of caveats there. Rewards and paids to customers. So this is the rewards program that they have. They're trying to make this to break even. As Chris stated, if they do so, does that not bring out the risk of the SEC saying, no, you are a security? So we'll see. Rewards, marketing, and sales, that's obviously growing. They're trying to, I get Voyager digital ads all the time on YouTube. It's actually a bit annoying, but they have to do what they have to do. They're going to actually get some people to join up, and with the promise of having 9% interest or whatever interest it really is today, a lot of people are going to think that's very interesting, which we'll talk about the caveat. And I don't know if I should be careful with how I state it because I don't want to get into any legal trouble. But you know what? I'm going to express some caution because it's not a battle, and most of you can read between the lines anyway. So cost of merchant services, so they basically break even on that front. And I think the merchant services is specifically when you swipe that debit card, so they expense it and then they take a little bit of a profit. So they are making a bit of a profit on the operations of that business, but very slim. Share-based payments, so share-based compensation, I'm not going to shoot them down for that. Probably it's normal for them. And they have to get the lowest cost of capital, whatever it is that they got to do. They got to do it, okay? Employee benefits, you got to pay the employees. That's fine. So nothing crazy talking about there. Okay, so before we get to the other losses, we actually have to talk about the income from the operations or the business itself. So we actually do see that the income or loss before those extra losses, they are down, they're negative. They used to be positive, now they're down negative. And then the other losses are, again, like I stated earlier in the video, but just in case I know some of you skipped over the earnings call presentation, those are not realized losses, so we can kind of take those away. They haven't realized those losses, okay? And we just know that Luna blew up. They talked a little bit about UST coin, which is the Terra equivalent in the Terra system. So that one blew up. That's an algorithmic stable coin. We've talked about that a little bit in the video not dedicated to that, but it's better late than sorry video, that one. All right, so taking a look over here. Didn't really want to go over any of this stuff, but it's fine. There's videos already about the share dilution or whatever. Okay, so the the cash flows. Cash flows provided by operating activities, it is down, it is negative. Crypto assets held, I don't think there was anything out of the ordinary because I wanted to focus my time more on the other parts. So we're going to move on to that. But yes. Okay, we don't really care about that too much. because I'm trying to allocate my time appropriately. This is where it begins. So level 1 assets are very easy to determine the fair value measure. Level 2 assets, and you probably have heard me say this in other videos, so I repeat myself because we have always newer people joining the channel and I want to provide them value as well. But level 2 assets, those are a little bit more difficult. So that's the crypto assets you can think of. So the crypto assets that they have on the books, that's the level 2 assets, and they're primarily focusing on all that stuff as a broker / bank. And then level 3 assets, I would almost tend to ignore those because the fair value estimation procedures in that category are questionable to say the least, and are the prime source of fraud. Not saying that this is fraud at all, by the way, but I tend to just ignore those. I don't pay too much attention because those are very subjective. But level 2 you can kind of trust. Level 1 you can definitely trust. But yeah, level 2, nah. Sorry, it's level 3. Level 2, still there. But level 2, you can tell the value pretty quickly. So that's where all the crypto assets are held, as you can see. Crypto assets held, crypto assets loaned. What I want to actually highlight to you is that the liabilities are greater than the assets. So something is giving there. So the crypto assets fiat payable to customers is greater than the crypto assets held and the crypto assets loaned. Okay, so a little bit of a question mark there, to say the least. But if you take a look, it's because of the collateral. The collateral received, the collateral payable, right? They're both in there. And then, of course, the investments is what brings it up over the top there. But if you add up the crypto assets loaned and crypto assets held, right? You add those two numbers up, you get a number, okay? And that number is about 5, 4. Yes, and it actually ends up being less than the liabilities. All right, so not good there. So that's a little bit flag that. So we're concerned about that. Okay, all well and good. But then take a look at the June 30th, 2021. Their business actually in the crypto loan segment was not nearly as big. So that's when they're loaning out the cryptos to other parties, which we'll take a look at. That's why I'm trying to speed through this and try to focus my time on precisely what I want to highlight, not to make this video 2 hours long. All right, but you guys probably saw me exploring this stuff during the call, and I'm just kind of highlighting it to you now. But yeah, their business wasn't that big in terms of loaning previously. Now it's a big portion of their business, or it's a much growing portion of their business. They don't loan out all of it, thankfully, but they loan out a decent amount. And during a liquidity crunch, that's kind of dangerous. But they're saying that they said that in their earnings call, we'll just take their word for it. There is no risk. They vetted all of their counterparties. We call that counterparty risk, by the way. It's not risk of Voyager, but it's counterparty risk. We actually talked about this in the live stream regarding Citigroup and the potential problems with Citigroup with counterparty risk in Russia. But, for now that hasn't manifested. And in fact, funnily enough, I'll just mention it here real quick. Warren Buffett has bought Citigroup. Totally predicted that, by the way. That's why it's in my portfolio, because I totally, not sarcastically predicted such a thing. And yeah, I'm a genius, and you should totally buy my course that doesn't exist right now. So yeah, I'll just be expecting just money transferred to me via Voyager Digital in the affiliate link down below, because I'm sponsored by Voyager, and this is just all a publicity stunt. Okay, back to seriousness. The number of coins, so this is actually, crypto assets held, and you can see that it adds up to that fancy number right there, 3.4 billion. And we go back up here, 3.4 billion. So these are the crypto assets held. They had Bitcoin, ADA. I don't know what any of this stuff is, guys. I'm sorry. Sue me, bro. But I know what USDC is. That's the stable coin. They have Dogecoin, know that. Link, okay, I never heard of that one. But ADA coin seems to be the second most popular. Primarily, they have Bitcoin. So they are basically, what they're doing here is they're holding Bitcoin the most. And if we actually take a look down here, oh no, that's not. That's even further down. But this is actually the previous year. Bitcoin is still the dominant player. Ethereum was number 2. They actually brought down Ethereum quite a bit. Where is Ethereum here? Oh, okay, Ethereum is right there. They brought down Ethereum to about 6%, and previously they had Ethereum at the second highest position at 17%. So a primary focus on Bitcoin here today. So right here, crypto assets loan. This is what I was looking for. So here's what another concern, another flag. They loaned out Luna. So yeah. Okay, so flag there, and enough. Flag doesn't mean end all be all. Red flag or anything like that, but it means like, what's going on there. They do loan out a lot of the U.S. stablecoin. So for those of you who are wondering, like, what the heck is all this stablecoin nonsense? Okay, to put a complicated point simply, the stablecoin is like a old school certificate, right? So you back in the olden days, before I was alive, before even my grandparents were alive, they used to store gold, physical gold, at a bank. You would go to the bank and say, "Here's my gold. Store it for me, and you serve as the function of a custodian on my gold. And then in exchange, I get what's known as a bank promissory note." Okay, so it basically says I own this gold at this bank, and I could exchange this note to another individual, and I could pay you in gold without holding my gold, and the bank would hold my gold. So basically a stable coin does the same thing. It's the same mechanism, but for the coin in question. So, or it's not the coin in question, the currency in question. So a stable coin, US dollar stable coin, is supposed to represent dollars and is supposed to make it very easy, very fluid to transfer money, transfer dollars between different entities. So it actually serves as a liquidity booster for the crypto market as a whole. But the implications, the wider implications, I think are fairly interesting. And it's why banks themselves are actually creating their own cryptos, but to exchange between one another, to represent the underlying asset being the dollars, right? But let me be very clear. This is a note I want to make sure that I get to you out here today. So from my understanding, so don't sue me, bro. From my understanding, USDC is not FDIC insured. It is only the dollars that you hold at these exchanges that are insured by the FDIC. And in fact, being so, the USDC coin is having greater interest on it because you are basically putting liquidity into the system, and then they are compensating you for that liquidity. And the rates are, yes, they are extraordinarily high. However, should a liquidity crunch kind of manifest itself within their markets in particular, or their ecosystem, you are potentially going to lose it all if they're not careful. And things can get bad very quickly. Okay, so again, those are opinions on potential scenarios. So now we see that Ethereum, now I see where the Ethereum went. So not all of it, but a good amount of that Ethereum, they started to loan it out because the Ethereum held here is not, this is held on the books. So right here, they had a lot of Ethereum, and now they're apparently lending out this Ethereum. So they lend out USDC, they lend out Ethereum, they lend out some Bitcoin, but again, the primary is Ethereum and USDC, and then Luna at about 10%, and then so everything else is 9%. So they basically lend out a good set of ones, and these are the primary ones. So from my understanding of the crypto environment, okay, the primary or the largest crypto ecosystems are Ethereum, Bitcoin, and stable coins, because stable coins allow for all this liquidity. So it makes sense that we should see it as USDC, Ethereum, and Bitcoin. Oftentimes you might see Ethereum and Bitcoin kind of changed up, but Bitcoin being the larger one, you can see that they hold more of Bitcoin and then they lend out a good decent chunk. So if you combine that, Bitcoin is a huge portion of their overall pie, and Ethereum is the second, or actually either Ethereum or USDC is second, but I think it's either one or the other. So it kind of makes sense. It makes sense, especially when you know a little bit of economics and settlement currencies. I talked briefly about that, how the Chinese renminbi is like very small amount of settlement currency. That's a whole different conversation. We'll get into that. But want to go over to the counterparties, so counterparty risk. So we see the borrowing rates from each of the counterparties, A through G. We don't know who they are, for obvious reasons, but we can kind of guess, because if you guys are good with geography and you guys are good at investigating what are the big companies that might be borrowing crypto or lending crypto within these respective jurisdictions, you might kind of pencil out who the counterparties are, but you won't find out here. So counterparty, we have British Virgin Islands, Singapore, United States. Counterparty C, bet you is Coinbase. Okay, that's my guess. You guys can make your own guess. The Singapore is probably I think it's Binance. So that means maybe Binance. British Virgin Islands, I have no clue. I give up on that one. Maybe that's crypto.com. I don't know. I don't know where crypto.com's from. So you comment down below where crypto.com is from. But yes, United States. So various is 6%. And basically, okay, so these are their counterparties that now they're they were talking about this, by the way, in the call, that they didn't have this before last year, and now they're more diversified. So now they're less risky. And so this is spreading out the counterparty risk. And they actually expanded it drastically. So counterparty A, B, and C, and D didn't exist before, but now they just took on all the business. So whoever's in the British Virgin Islands, that one is a big portion of the counterparty risk. So would probably try to find out who that is if I was invested in this. Okay, so now this is fiat payable, or sorry, not fiat, but assets held payable to customers. So remember, like I said, so going back up here, and I kind of, again, was rambling because my brain was kind of catching up with what I wanted to talk about. They hold these assets as assets, but they should be matched out in the liabilities portion because a deposit is a liability, and then they themselves transform that into an asset. So the reason why it can also be classified as an asset in terms of staking is because when they, again, like I explained a little bit with staking, it's to simplify a complicated topic, make it simple. The more money you have of that currency, the more likely you are to mint or create that currency. And that's different from proof of work, which is what Bitcoin is. So Bitcoin is not proof of stake, it's proof of work. All right, so going back to this, where are we at? Did I skip it? Yeah, I did. All right, we're coming back. Here we go. So payable to customers. So this is what they owe you, supposedly, and they have Bitcoin. So you do earn interest on Bitcoin as well. But you also, if you deposited Bitcoin, you are also owed that Bitcoin when you want to take it out, okay? And so this is where they're trying to, make the argument they're not a securities exchange. These aren't securities. You can see that USDC and Ethereum. So, okay, so this answers my question. Bitcoin's number 1, USDC is number 2, but this is an owing because in some instances you probably there's many ways to earn stablecoin through Voyager. And then Ethereum's number 3. Okay, I don't know what these other ones. Shiba Inu's in there, Luna's in there. So Luna is probably going to be changing soon. But you can see how it's drastically skewed to the top 3. And if you map it out by coin market cap, you probably are going to get something similar. So basically, they're going from most liquid to least liquid, which makes sense from the perspective of a financial institution. You don't want to be caught with your pants down, and that's what happens in a liquidity crunch, right? You don't want to be caught with your pants down there. So taking a look at June 30th, 2021, you can see how fast the USDC market has grown. Okay, so it wasn't that much comparatively to today. It's almost doubled. And keep in mind that everything's also grown. It also doubled. So the base has doubled, and then that makeup of that base has also doubled. So it's a lot of growth in USDC. We see that Dogecoin has actually come down a bit. Yeah, so it used to be Dogecoin hit a high of about 6%. Now it's at 2%. Voyager, this is their VGX is their coin. I know that. So actually, I do know that one right here. Voyager is after the ADA. I don't know what ADA. You know what? I might as well. What the heck is ADA? Because you're going to be like, what the heck is ADA? Cardano. That's Cardano. Okay, whatever. Cardano. So Cardano is in there, and now Cardano is above VGX token. So VGX token is their own token. It's how they can actually incentivize rewards and stuff and all that jazz. So, it's a way of doing capital raises too, but who cares? So cash and consolidated shares. Okay, so I think that's the acquisition. I made some notes as well. They also value the acquisition or at least the customers acquired, they depreciate them over the course of 10 years. So they're assuming that that's like the life cycle of them. They did say that, for example, in the presentation that the value of a customer is realized after 90 days. So after 90 days, they are profiting on that customer. And even though it is quite expensive to acquire them in the first place, they are penciling out that they can be profitable on that customer at that time. Okay, so I want to see where is this other stuff. I also want to comment real quick on a lot of ums. Every time they asked a question about regulation, he was kind of making the so that oftentimes is a sign, not a definitive proof, but can be a sign that someone is kind of getting caught off guard in that question. And understandably so. It is a difficult question because I'd say that, it's something that management is having to contend with. And it's like the answer is more uncertain than anything. And he can't say it like that because he doesn't want the stock to tank. So, yeah. Let's see here. I don't really care about that. Didn't really want to talk about that. Yeah, I didn't really want to talk about that. I was trying to find if there's anything else. So they acquired this company. The technology has an estimated useful life of 7, brand 5. customer relations 10. That's the depreciation that they're basically doing, or the depreciation schedule they're applying to those assets that they acquired. It's not necessarily that those are the value, how long it will last, but for company or business purposes, that's the lifetime that they're going to depreciate under. Let's see here. And you see they're showing you a depreciation schedule there. I think that's pretty much it. But, after that, I'd say that a company like this is going to be very, very difficult to do some sort of forward projections. But I'd say that my forward projections for this company that I'm kind of penciling out is that the company, and I'll just take this away so we're not distracting you, but the company, I'd say, will continue to grow users, maybe in spite of the issues going on. And actually, that's what something the analyst Chris, I always remember your name, Chris, because you ask the hard hitting questions. Accounts grew despite of everything going on right now, and but he actually mentioned, albeit an anecdotal example, I also have heard this anecdotally, that users are having trouble liquidating in some instances. And if you read the fine print on the Voyager digital terms and conditions, they do state that they do have the ability to prevent you from doing certain things in a pending liquidity crunch. Okay, so hypothetically, that's not what they call it, but I'm telling you that's that's the scenario that would cause that. But yes, so analyst Chris, he was pointing out some inconsistencies with previous estimates or previous analysis as far as barometers for how the company should be evaluated. So really good analyst Chris. In every single earnings call, I would watch out for what Chris has to say and hear his question. I think his questions were the most insightful. So again, forward projections, I think they're going to continue to probably grow users. However, a concern I have is almost everything, if I'm being honest. So the profitability longer term of this company is in question for me. I don't see how their moat necessarily is any bigger. I would say between these two companies, Coinbase is probably far better if you wanted an exposure to something in the crypto asset space, probably far more trusted by institutions. However, I don't understand really at this point how all the counterparty risks intertwine with one another. It could be very bad. It could be that these guys are all lending to each other in such ways that if something big happens, they're all going to take each other down. Maybe some of them are going to be isolated from the event, but they're not going to be isolated fully, because even then, if something big happens, they're going to take down each other regardless because of just sentiment. So they could be protecting themselves. Voyager might be protecting themselves. It's just difficult to really determine that. We just have the CEO's word for it. So as far as I can say for that, I guess you could just trust the CEO and say, yeah, they're safe, they're fine, nothing bad's going to happen. But of course, I would say that the leader of Terra, probably said the same thing. I mean, I think I took you guys to their website, and they, sold this kind of dream of something super stable, super safe, and yet it didn't really pan out. But yeah, I know that the stable coin that Voyager does use is in fact safer. I'll say that as a statement of fact. Doesn't mean it's perfect, and I don't know if it's perfect, but as a statement of fact, it is safer. And again, we could be comparing two things that are very bad, but fair enough. I would say that I would put myself behind the statement that it is safer, not that it is perfect. So here are my words there: not perfect, safer. Okay, so I'll also talk about just briefly this business, because I think that people will say, well, you didn't talk about this enough. Well, okay, fine. They have this new spending system where you get the debit card and you can go out and buy things, and they're going to make some money off of that. So people don't know this, but when people think, and I've discussed this in bank videos, people think that the bank loves it when you don't pay your credit card. No, that's stupid. Sorry for the insult if you thought that, but no, that's dumb. So they don't want that, okay? A bank would prefer that no one is delinquent. Just no one is delinquent, everyone pays it off. And because they still make money off of your spend, right? So when you think you're getting this cash back, please note that the merchant is paying on top of that. So it would be more beneficial to the bank if I could just have riskless customers without any risk, and they're all just doing their spend. And let's say they're all high spenders. I would love that. That would be my ideal customer. I wouldn't want a customer that, some of them won't pay, right? That's the more of that I have, the more delinquencies I have, the lower quality the balance sheet. And some banks are priced for that lower quality balance sheet. Now, can money still be made? Yes, but you'll never be like the best of the best banks. So the creme de la creme of banks, they're going to have low delinquency rates, and they make more of their money from the actual transaction volume and then the fees on top of that. So just to be clear. Now, this is a debit card, as far as I understand, not a credit card. So a debit card carries less risk because they're just spending your money. A credit card can drive more business because a consumer tends to like the form of credit. And I like credit. I like to use credit cards, not debit cards, for the security, added benefits, and all that stuff. And because if you're a responsible human being, you can pay off all your money all at once. So if you're not a responsible human being, and it's okay, as well as we're honest with ourselves about it, you can use a debit card. But this is not a video about that. So you are able to basically spend USDC, which again is that thing that I said that stable coins have a practical use case in the future, and that is by basically being this thing that represents the US dollar and allows for transactions to be a lot easier. So this is again what banks did in the past with gold and bank certificates, and eventually we just started only using bank certificates, and then eventually we decoupled from the gold standard. All right, so that's how we did things in the past. So we stopped using gold coins. And this actually goes all the way back to even the Templars. The Templars invented that system. But this is now the reinventing that, but with dollars. So, you have US dollars, and then you have USDC that represents those dollars in an ideal world. And then you go out and spend that USDC, and it makes it far easier for these institutions to, transact with one another far across borders and stuff, and they still kind of have that certificate of ownership represented by the coin itself. All right, so I think that's the most exciting part of all of this that I find interesting, and that's personally me, and you guys can probably get where I'm coming from. I find the stable coins, as far as their application purposes go, the most interesting aspect of any of these companies, okay? Now, all the banks are doing this, just so we're very clear. So it's nothing completely new. So this company will live and die by crypto, okay? So unless they pivot hard and they compete hard in equities or other forms, I think, for example, and Voyager, if you want to hire me as a consultant, hey, I'm here. But no, you should, maybe they are moving in this direction already, in which case you don't need me, but you should definitely think about moving in the direction of basically blockchainifying all forms of assets. Make it easy for me to buy a home. Make it easier for me to buy other things. And decentralize, the buzzword, decentralize? Yeah, decentralize things. Yeah, why not? Fine, do it. And that's why I own Overstock. Just a little shout out to Overstock. But it's a speculative holding because I own it for those reasons, not for the core business. So we'll see how that pans out. It could very well go bankrupt. Okay. But yeah, that's pretty much my thoughts here on Voyager Digital's earnings. Let me know down in the comments section below what you guys thought. If you guys found value in this video, feel free to leave a like if you so want. And yes, we shall see each other on the next one.